Hi everyone, it's Jack back with another video. Today I'm going to be talking about Advanced Micro Devices, AMD, company well known to many, fabulous semiconductor manufacturer that produces chips for all sorts of applications, mainly data center, gaming and embedding as well as computer applications. It fell from grace quite a bit this year, down 60% year to date. Now its market cap is just shy of $100 billion, trading at valuations that have not been seen for a very long time with this company. It's been a fantastic performer, averaging 30% revenue growth over the medium term, and is well off its 52-week high of $164. Not that far off its low. Looks like an attractive opportunity. Releases Q3 earnings about half an hour ago, and they look pretty good to me. The stock's reacted positively, up around 5% as we speak. So I'll dig into these earnings, see what I think about AMD's quarter, then look at its valuation, its profit margins, its gross margin, then do a DCF, see if we think this is a buy, sell or a hold right now. Like and subscribe and enjoy the content. Let's get into it. So first of all, a summary of the key metrics of this quarter. I'm actually quite surprised that the market has reacted positively to this, and I can only expect from the reports of Intel and things like that the market was expecting this to be much worse than it actually is. Revenue up 29% year over year to $5.57 or $565 billion. The expectation or the guidance was 5.58, so it's a slight miss on the revenue standpoint. The stock is still reacting positively, so clearly there's some expectations issues here. Gross profit of $2.8 billion on a non-GAAP basis, I'll explain that in a minute. Gross margin 50% or 150 basis points year over year. Gross margin is actually down on a GAAP basis. Operating expenses $1.5 billion, that's up 47%, that's a significant increase. Operating income $1.26 billion, that's up 20%. Operating margin down 1 percentage point to 23%, and net income of around $1 billion, up 23%. Earnings per share on a non-GAAP basis of 67 cents, down 8% year over year. So overall, these metrics are not actually that impressive. They've missed guidance significantly on earnings per share and missed guidance on revenue minutely, but obviously the market's expecting significantly worse. Now the asterisk that I mentioned over the earnings per share is because on a GAAP basis they actually only recorded 4 cents of earnings per share compared to 75 cents last year. That's basically because of a write-down or an amortization of Xilinx acquisition related intangible assets, some increased R&D investment. Now I'm not going to ding them too much because on a non-GAAP basis net income of $1.1 billion compared to 66 million on a GAAP basis. So in a regular year this would be absolutely fine without the Xilinx acquisition costs basically. So 67 cents of earnings on a non-GAAP basis compared to 73 cents, which overall is still not impressive. They're down significantly on a GAAP basis, but even on a non-GAAP basis they're reduced due to the previous year, and that's primarily due to the client segment revenue. So looking at the revenue broken down by segment, first we'll go to what will be the future of this business, and that is the data center revenue. Very, very impressive, up 45% year over year in revenue to $1.61 billion, $505 million of operating income. That's up 64%, really carrying the company this quarter. This is in stark contrast to a company like Intel, where its data center revenue is down significantly, and shows me that even in these tough times, and as what looks like a cycle in the semiconductor industry is coming to an end, and the prices are coming down and the revenues are coming down, AMD continues to perform really strongly and is just out-competing Intel right now on the data center side of things and grabbing market share from them. From the client point of view, which is basically computing, as we saw with Intel, they were down significantly, and AMD has not escaped this at all. $1 billion in revenue there or thereabouts compared to last year's nearly $1.7 billion, so that's down 40%, and it's swung to an operating loss, so down 105% from a significant gain the year before. This is obviously not impressive and seems to be a wider industry problem rather than AMD specific problem, so I'm not going to batter them for this, but I'm still not impressed that they're switching to an operating loss, that they've lost the economies of scale. This needs to return quite quickly, but this seems to be a secular demand problem rather than an AMD specific problem. On the gaming side of things, that was up 14% year over year. It continues to be the largest segment, although it will quickly be overtaken by the data segments in the next quarter probably. There's $1.6 billion of revenue, up 14% year over year. Operating income actually down 39%, which is slightly worrying, but that is primarily due to price drops because graphics cards are not what they were. The crypto winter is looking like it's happening, or certainly cryptocurrency is down. Ethereum is no longer mineable. Significant drop in AMD's operating income because they just can't charge the higher price that they were doing, or particularly on resale as well. The embedded segment, which is basically the Xilinx acquisition, so the year over year up numbers pretty much meaningless because while they are incredibly large, it's just because they acquired a $40 billion acquisition of a company that does embedding. So that $1.3 billion is essentially the new business, up from 79 million the year before, and all that operating income essentially comes from the Xilinx business. So while for a company that's valued at a PE of under 30 right now, it's growing 29% year over year with strong gross margins, that's still very impressive. This clearly bucked the trend of continual revenue growth quarter over quarter, now just to a 29% year over year growth, down significantly from the previous quarter, which was $6.6 billion of revenue. Data center, gaming and embedded segments all really strong. The client segment was the real drag on this quarter, and it's probably going to drag them in the next couple of quarters. The guidance doesn't look overly impressive for the rest of the year, and as we've seen with companies like Intel, the client segment doesn't like return until 2023-2024. One of the benefits of the fabless semiconductor model, when done right, is excellent gross margins. AMD typically sees gross margins in the 45 to 50% range. It was down 6 percentage points year over year to just 42%, which is the lowest it's been in quite a long time. And the decrease primarily due to, again, the amortization of intangible assets associated with the Xilinx acquisition. So, looking at this quarter as a whole, it's not actually that bad, and a lot of it has been masked by the Xilinx acquisition. I think that's why it's been well received by the market. The revenue was just about where it was expected to be. The data center segment surpassed its expectations significantly, whereas the client segment was a drag, as we've seen in the wider semiconductor industry, is that the PC sales are seeming to decline and demand is down. However, overall, I think this is a pretty strong quarter if you remove the Xilinx acquisition intangible costs. I think this looks really good. The outlook for the next quarter was not as rosy, however. 5.5 billion of revenue, so another quarter-over-quarter loss. That is, of course, plus or minus 300 million, so it could be an increase. It's going to be growth around 14% year over year, which is a significant decrease from the 29% we've just seen in a quarter with reduced revenue. Gross margin 51%, so they're predicting that coming back to where it was or even stronger. $1.55 billion in operating expenses, and that's as a percentage of revenue, that's going to be around 28%, which is high and above average for the rest of the year. Their interest expenses and other taxes is going to come in at $175 million, and they're expecting the diluted share count to be 1.62 billion shares, and that's going to come down over the course of the full year. But still, growth for the full year of 43% is very, very strong when we consider this company's valuation, with a gross margin of 52%. However, it is definitely decelerating due to some secular pressures, particularly on the client group. Now let's look at AMD, the stock. This company trades on a trailing basis with a PE ratio of 25 and on a forward basis of around 14. Now that PE ratio of around 14 is right in line with the S&P 500's averages on a forward basis. This is clearly not an average S&P 500 company. It's averaging 30% revenue growth over the last few years. It's even when it's looking bad, it's going to be around 15% for the quarter, 43% for the year. Has 48% gross margins, nearly 15% net margins. This is an outstanding company with an excellent management team in Dr. Lisa Su as the CEO. I think she's an excellent operator of this business. I think this is really bucking the trend for semiconductor companies. Nvidia seems to be struggling, although I think it's a fantastic business. And Intel is positively on fire at the minute and needs putting out. Whereas AMD seems to be chugging along really strongly. The data center segment looks good. So I think this price is actually quite justifiable as a purchase. Price of free cash flow is a little high, around 24.5. I would prefer to pay under 20, so it's definitely not all sunshine and rainbows. This could certainly be seen as expensive by some people. Return on invested capital is a little light, around 12%, as is return on equity at around 12% as well. Of course, the better valuation technique is doing a DCF to work out an intrinsic valuation based off the sum of its future cash flows. Now, data for AMD is a little spotty because it hasn't been consistently profitable over the last 10 years, but it has been over the last few. Revenue over the last 5 years is up around 18% on average. It's actually up close to 30% over the last 3 years, which is really strong. I think you can continue this going forward. Average over the next 10 years, they can probably go around 18-20%. Even when times are looking hard, they're still growing 14% quarter on a year-over-year basis with a weakened quarter, and 40% year-over-year, which is really strong. I think the free cash flow, having risen 21% this year, will continue to rise in line with revenue roughly, and they'll record maybe 15, maybe somewhere 13 to 18 range. I think 15 is a fair estimation. Of course, this isn't the most conservative estimate in the world, but I think with long-term secular tailwinds behind the semiconductor industry, AMD's excellent model, its fantastic management team, and its strong product leadership, I think it will do just fine. I think 15% free cash flow growth rate over the next 10 years is absolutely achievable. And using this and a 9% discount rate for the long-term returns of the stock market. This gives a fair valuation of around $65 compared to a present-day stock price of just shy of $60, and that's going to rise tomorrow, looking likely, or it's open pre-market. So let's call it that it's about fair value right now. Now, you typically want a significant discount to fair value, but I think for a company of AMD's quality, that's not going to happen. And I think this is a very, very opportunistic time to be picking up some AMD shares. I've reopened my position in AMD myself. I owned it when it was about $130, $140, and I sold then, having saw over 100% gain in less than a year. So I was very happy with that. I sold it kind of at the top of the market because I saw the way things were heading for these type of companies, and I was very sad to leave this company because I think it's a fantastic business. I was sad to sell the stock. I'll be looking to get back in at prices like this. I've been patient and I'm very happy it's paid off for once. So I'll be buying some more shares of this and start in a position very, very soon, regardless of what happens tomorrow, really. So with that being said, don't just do what I'm saying. Form your own opinions on AMD, and importantly, tell me in the comments below what you think. Whether you think this is a pig of a business is going to go down. Tell me what you think of the semiconductor industry, whether it's at the end of a cycle or not, blah, blah. Whatever you want to do, tell me in the comments down below. Like and subscribe and you're in the video. I'll see you again next time.